Hey guys, hope you are all having a great day. We were doing so well today. We were continuing to extend our strength until all of a sudden, the entire market slumped. I was searching frantically for minutes until I figured out that more war-mongering fear, spread by the media, had caused investors to pull out. We have a couple of things to go over, so let's skip formalities and get straight to it. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Okay, let's talk war, because that's what investors are being sold by the news today. Stocks added to Thursday's losses after more concerns were increased on the current geopolitical concern between Russia and Ukraine, weighting heavy on stocks and selling oil prices soaring to a fresh 7-year high. The S&P 500, the Dow and Nasdaq all fell after a relative choppy session earlier in the day. The 10-year Treasury yield, an important benchmark, lowered after it finally broke above 2% for the first time since August. The ongoing situation with Russia is not only affecting oil though, it is also having an effect on the chip industry. The White House warned the chip industry today, telling them to diversify its supply chain in the event that Russia retaliates against the threatened U.S. export curbs by blocking access to key materials. The potential for retaliation has been getting more and more attention, especially after Texit highlighted their reliance of many semiconductors manufacturers on Russian and Ukrainian source materials like neon, palladium and others. According to Texit, over 90% of semiconductor-grade neon supplies come from Ukraine, while 35% of palladium is sourced from Russia. Markets were absolutely trashed today, which makes the bullish run that GME and AMC had even the more exciting. Both meme stocks were pushing up and hard, seemingly on their way to break above yesterday's high and continue their way up. However, when the media began hyping up war in Europe, as you might imagine, all stocks and crypto plummeted. Still, watching the stocks have their run like they did was very impressive, and brought about a lot of happiness to investors, who have continuously seen their investments get shorted over and over. I myself am down over $80,000 on GameStop alone, with total losses for my long-term holdings being well over $120,000. It's an ugly number, but honestly, I really do like GameStop and AMC at the current price, and I would love if they remained here for a while longer, but that's just a selfish preference. Moving on. Jon Stewart made a tweet today announcing an episode on Apple TV where he will talk about the GameStop situation and Wall Street. I am really excited to see what he has to say, and I'm glad that finally someone with a wide audience will be bringing the current situation to light. We need exposure more than ever, and who better than the legend Jon Stewart? Still, I am not getting myself too excited, as nothing he might say will really change anything. I just buy, hold and cry watching the charts. I know I have beaten the Fed topic to death this week, but there is so much more to talk about, especially now. This portion of the video is going to be DD, and it does not necessarily have anything to do directly with meme stocks, but rather a macroeconomic approach to the topic of inflation and red rate increase and the impact they will have on developing countries. Feel free to skip this part if you just want to head over to the performance of the day. I want to shout out Paul Hannon for an article he wrote on this, which I will be borrowing from. Anxiety and uncertainty rule the minds of everyone participating in the markets. Now, with the anticipation of a series of rate increases brought by the Fed in order to fight off inflation, central bankers in developing countries have been forced to hike their own interest ups as a way to stay ahead of the US rates that will destabilize their economies by pushing up their own cost of debt. This would weaken their currencies and drive capital out of their markets into US securities. With the Fed expect to raise rates at a minimum of 7 times this year, if they are successful in their goal, the Fed could help central banks everywhere. But for now, it is an absolutely chaotic situation, much worse than the one in the US, for smaller developing countries. Foreign central banks have had a very difficult time keeping up, but with the Fed no longer sitting on the sidelines of inflation, they will now have a better prospect to curtail all the problems they have been enduring for months. The risks for developing countries are that right now, nothing is clear in how far and fast the Fed will decide to raise interest rates, which is something I expressed concern on the last time Jerome Powell had a committee. He did not provide solid dates or numbers as to what to expect, he just teased those changes are going to be happening. Because of this uncertainty, developing economies could reverberate their own recovery processes. An added constraint is that their governments and businesses have substantial debt denominations in US dollars, and will see their interest payments rise. The costs of staying ahead continue to mount. For example, the International Monetary Fund lowered its growth forecast for South America's largest economy, Brazil, this year to just 0.3% from its earlier estimate of 1.5%. The prospects for their central banks and others, such as Russia, should now be less daunting than previous periods, but nowhere near the place where they should be. Concern that inflation will be more durable than initially expected is a serious challenge that they have to address. I wanted to make this little segment because, as I have said, the eyes of the world, not just the US, are on the Fed. The mismanagement they are doing and the lack of proper communication, along with the endless lies brought about by important delegated public officials, are having serious consequences of the rest of the world, and that will have a lot of implications for all economies, including our own. Let me know if you liked this little segment in the comments below. It's more in tune with my morning video style. Let's now talk about today. The Fed submitted over $1.635 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 57% of the total volume today, while dark pool trades for GameStop accounted for 50% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bullishly, gaining over 1% for the day. It began trading very strong during the pre-market, staying above the VWAP and moving from 18.22 to 18.85 at one point. Upon market open, AMC became very volatile, and dipped below 18.40 before running up to 19.30. After volatility stabilized, AMC had another jump, this time breaking above the high of the day. It retraced and tested the VWAP only to bounce back up strong, reaching 19.66, the high of the day. It was close to this period when news about a potential war with Russia was spread by all corporate media outlets, driving a lot of fear into the markets, which resulted in a sell-off on AMC that saw its price drop to test support at 18.503 times. AMC slightly bounced up, closing at 18.81, below the VWAP. As for next week, as it is common on this channel, I will be making a video on Sunday talking about what I think is bound to happen. GameStop traded bullishly, gaining over 1% for the day. It opened and, after stabilizing a bit, started consolidating above the VWAP. It began running shortly after, reaching 129.86, the high of the day. It retraced a bit and entered an ascending triangle that had it ready to break above that resistance and have it shoot up. After that run, GameStop began breaking support and dipping. The bad news set the entire market in a selling frenzy, and drove GME back down below 121. After that low, GameStop began moving up again, closing at 124.25, below the VWAP. As for next week, like I said, I will be releasing a video on Sunday talking about what I think is going to happen. And that is all I have for you guys today. It's been a very crazy week. I find it interesting and curious that for the last 2 trading days, GME and AMC both appeared to be ready to make significant progress, only to be pulled back by strange circumstances. I understand bad news are pulling all stocks back, but I find it weird that while other stocks continue to fall, and meme stocks continue to rise and shine, they suddenly become affected at the precise moments when they are about to pop big time. Regardless, AMC is up around 26% for the week and GameStop is up 23%, and at their peak yesterday, both were over 30%. I wish you all a fantastic weekend. Go rest, play some games, go watch some movies and touch some grass. Relax a bit so that next week, we can come back strong and fresh into the endless push for MOASS. Thank you all so much for sticking by the channel. I hope you had a great week. Remember to come join our Discord. I am adding a lot of stuff over this weekend. We seem to be close to 3,500 members in it. There, you can talk to me and ask me all types of questions. I also offer alerts for day traders, which is how I generate most of my income. There are chat rooms for all types of conversations, from meme stocks to general market analysis and much more. The Discord is free and open to everyone, so feel more than encouraged to come on over. Also, I have seen many people asking me if MOASS is impending. I think because we have been rising, and other stocks are falling, that many are thinking this is the beginning of the squeeze. I still hold my opinion that current market conditions won't bring about the crash people want. Even the intended recession the Fed might have to purposely create to fight off inflation will not cause MOASS, since it will be quick and measured. I think there is still much more room for growth. This seems to be a bear year so far, and stocks are correcting and the markets don't know what to expect from the rate hikes, so obviously nothing is too stable yet. Give it some time, enjoy this dip and hold. I have been buying a lot of crypto as of late, and next week I want to put a lot of money on GME. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.